Hey there, Dale.
Hey, how you doing?
I'm doing well. Happy Tuesday. How you doing?
Very good, thank you. It's a beautiful day.
Yes, it is absolutely. Today we're going to keep it real short and sweet. I wanted to talk to you about interest rates. Obviously, the big news last week, Dale, the federal funds rate got cut 50 basis points, or in layman's terms, 0.5%, which is fantastic. The average 30-year fixed rate mortgage, if you were to put 20% down and some discount points, is 6.09%. That's a very low comparatively to the past few years, which is fantastic. What do you think is going to happen next week?
We're going to go back up a little bit.
Whoa. Why?
Well, if you'll recall, and we did a video on this a few weeks ago about hedging and how lenders hedge. And I think a lot of lenders thought we might get a little bit bigger cut than we did. And so for in layman's term, a little bit of over-hedging. So they made it a little bit too good. So I think we'll see a slight increase next week.
Yeah, now don't go and think, oh my gosh, they're going to jump back up to 7%. Not even close. It's going to be a small little tick up. I mean, you can see we have these brief moments here. So let's take a look at exactly what you're talking about, Dale, with this hedging. So these are the mortgage-backed security charts. We're probably going to make you sick and tired. Green and up is good, red and down is bad. And you can see that September 17th is this red dot right here, this red bar. But about a month ago, we kind of hit this level. It was unsure, up and down, all around, and then all of a sudden, kind of at the end of August, beginning of September, we got the news that the Fed was going to cut interest rates. We didn't know how much, 25, 50, 75 basis points. So it was really up to the market to make a decision on hedging bets, as you've described. We're not going to get into detail there, but we kind of started down here and we rose up. So let's take a look at this a little bit more in depth, and we can see what the market actually hedged their bets on. So if we go all the way back to the beginning of September, let me zoom this a little bit to make it easier to read. So if we go all the way back here, we're going to take this bottom moment before the Fed announced anything. We're at 100.69 basis points. Actually, I got to be at the top of this. So 100.85. And then we had a slow rise up until we hit this holding pattern right here. And you can see the peak ended up right here, September 16th, 101.60. So we're almost a full 100 basis points high in those gains. And then we found out, okay, the Fed ended up only doing a 50 basis point cut. So now we're going to go from our high point of 101.6, and we're going to slowly correct down to match that federal basis point cut of 50 bips. Now, this is extremely reductive, very rough. It's not going to be true to those numbers. It's not going to hit a moment and then just pause. You know, like today, the Chinese market did really big changes and they're signaling inflation over there, and it's going to affect our markets. I'm not going to get into it, but it's going to change daily, and that's why we're going to see rates increase.
Yeah, and remember I said slight change. It's not going to change a lot, but honestly, until the current Fed policy shows some sort of normalcy, some sort of reasoning behind what they're doing, I think we're going to have some volatility, for lack of a better word. That doesn't mean swing from 5 to 8 to 5, but we're going to see some moderate volatility still.
Yeah, and before we let you guys go, we're just going to reiterate the importance of buying right now. This is the time to take advantage of the lower interest rates before housing prices take a giant swing up. I know it You know it. Real estate agents know it. It's buyers are out of the woodwork. It's very busy. Phones are ringing. People are starting to get into the market, and we're starting to see bidding wars. If you haven't seen one, if you just wait a little bit longer, it will come back. So time to get in the market. If you have any other questions, please reach out to us. Dale, I very much appreciate your time.
Have a great day.
All right, take care.
Okay, bye.